Let's take a look at the markets. Here's today's Money Metals Minute, brought to you by MoneyMetals.com. This week, Donald Trump aimed to unite the Republican Party, including putting a conservative with legislative and governing experience on the ticket on the issues of monetary policy in general and sound money in particular. Governor Mike Pence could prove to be a strong asset. While in Congress, he helped lead efforts to reform the Federal Reserve, including seeking the end of the Fed's so-called dual mandate. That mandate is what gives federal officials cover to pursue quantitative easings, that's QE, and other interventionist schemes in the name of promoting full employment. If the Fed stuck to only a single mandate of promoting price stability, then it wouldn't be orchestrating bank bailouts or trying to boost the stock market or prevent economic cycles from running their course. The Fed would just be concerned with maintaining the value of a dollar. Now here's a special report from Mike Gleason at Money Metals Exchange.
It is my privilege to be joined now by David Smith, senior analyst at the Morgan Report and regular contributor to MoneyMetals.com. David, it's always great to have you with us. How are you?
Very good, Mike. I enjoy coming back.
Has it surprised you how well the metals, and especially gold, which is often viewed as the ultimate safe haven asset, have performed of late, considering we're seeing all-time highs being made in the Dow and the S&P nearly every day? Not that gold has been soaring per se, because it appears to be consolidating and doing some backing and filling here, but it is holding up quite well in the face of the risk-on trade. Gold had a huge $100 move post-Brexit, and it hasn't really given much of it back. It seems to be solidly hanging in there. What do you make of that, David? What are your thoughts there?
Well, I think the game elements are changing a little bit here. Now we have this massive liquidity that the central banks are putting into the system to try to stimulate buying and strengthen their economies from Japan and Europe and the United States. And they think if they put enough money out there, which eventually some of it's going to become helicopter money where they actually drop it almost literally from helicopters to try to get people to spend it. And Japan is on the verge of doing that now. These type of things mean that we're in a different environment where a lot of assets are going up. And the fact that, for example, real estate and the Dow and some of these other assets and even the U.S. dollar are going up, to me, doesn't concern me about being a gold and silver holder, because fundamentally, real money is going to outlast all these other things. These are bubbles, and the metals are not in a bubble. They're just people returning to what has been real money for thousands of years. And gold and silver will be the last men standing when this architecture of debt finally implodes on itself. So this is an opportunity to add to your position or to start when prices are pretty calm and it's not on everybody's radar screen.
Former Fed Chairman Ben Bernanke, the man who coined that phrase, and the man who's also often referred to as Helicopter Ben, as you just alluded to a moment ago there, with dropping money from helicopters, talk about how the central banks can always generate price inflation if needed. Many in the precious metals community have been wondering when the Fed might get around to actually implementing this policy and handing out money to people. Heaven knows they've tried all manner of radical policies. On Wednesday, FOMC member Loretta Mester confirmed that officials might just go to this length if existing measures prove ineffective. It would have sounded insane a few years ago, but we've seen some extraordinary stuff. QE, zero interest rates, and we already know that negative rates are on the table. What do you think is coming from the Fed? Because it looks a little to us like they might be getting ready to try something even crazier than what they've been doing.
It really looks that way, and these type of things that you just mentioned are often trial balloons which are put out there to see what the public and the market's perception and reaction will be. I think it's interesting that Ben Bernanke is actually now almost wearing the sobriquet of Helicopter Ben as kind of a title of honor. You know, it's not something that he shrinks from, and so the fact that they're even thinking like that just makes you really wonder. We're actually have interest rates that are the lowest in recorded history, if you can believe that, because they're negative. And would you ever imagine that you would have a bank account where you would have to pay the bank to have your money put in there? I mean, it just goes against human nature, and it goes against, the idea of capitalism and business and everything else. You have a solid capital base when you save money and people are able to loan it out to the banks to create more businesses and more economic activity, not when you spend yourself into a hole so that you have nothing left, and then somehow that's supposed to be helpful. You become practically a ward of the state. So all of these things are turned on their head, and people just have to remain confident that they can keep their own sanity in it, because it doesn't make sense, and eventually it will collapse of its own absurdity, the weight that they put out there.
That was David Smith of the Morgan Report and Mike Gleason at MoneyMetals.com. Live prices at MoneyMetals.com show gold trading at $1,327 per ounce, $19.78 78 cents per ounce. Silver coming in at that.